here are entrepreneurs, consider themselves entrepreneurs, or would like to be entrepreneurs?
This is a left-hand or right-hand
Cool.
question again.
No, I don't want to confuse you like last time. You're still recovering. How many people here are investors, consider themselves investors, or would like to be investors? Cool. It's about even. How many people are both? Excellent. So that's great. And the whole purpose of what we're showing here is essentially a completely new alignment of interests between investors and entrepreneurs, which really has not happened in the hundreds of years of entrepreneurship. You know, Dutch East India Company, Merchants of Venice, you name it. Investors and entrepreneurs were rarely aligned. I mean, it certainly got better once there weren't debtor prisons and those types of things, but we've come only a small way. So what really made this possible is an evolution of platforms. A lot of old people like me remember when Jeff Bezos' little pixelated picture was on the front of the Wall Street Journal, and it was talking about, you know, this e-commerce site. It was about 1994 or so. And, you know, all of these naysayers were saying, oh, no one's ever going to put their credit card number in this crazy contraption. Well, he proved us wrong, which is good. And that led to sort of the next big revolution, which was, why should we have all of these millions of separate things everywhere? We can virtualize it. That technology led to crowd services, basically software on demand, software as a service, and then ultimately that whole model went to everything else as a service, like clothes as a service with trunk clubs, shaving supplies as a service. Now Gillette's actually doing that after Dollar Shave Club, and food as a service, etc. Then mobile, well, I don't just want it as a service, I want it exactly right where I am, when I am. So all of a sudden Lyft, Uber, Airbnb, you know, just wherever you are, whatever's around you, I can suddenly get that. And that sort of started the whole gig economy with TaskRabbit and everything else. So now, what we think is this next major revolution is the blockchain. And it's what fundamentally makes it new and fundamentally makes it important is, unlike the rest of these other digital things, digital platforms, they all require trust in some entity, right? So you've got to trust Jeff Bezos, you've got to trust Salesforce, you've got to trust, I was going to say Travis, but you don't have to anymore. Right? But here, with blockchain, the central mechanism is consensus. Like, the main thing is, the trust is basically in the software, and it's in all the nodes of the software and how it's changing it, because it's this ledger. Well, what's the most important thing when you basically have this unique recording of all of it? Well, it's who owns it. So for the first time, you can actually own a piece of software, what they call a digital asset or a crypto asset. It's an entity, it's an asset, and it will say, if I decide to give my digital asset to CJ, everybody who's running their nodes will say, hey, David just gave this digital asset to CJ, and nobody can argue. Like, some lawyer can't come and say, hey, you've got to give that back, because they can say, well, no, everybody else agrees. There's actually no way unless he wants to. So in all of this, there are obviously a lot of mistakes that are going to happen. I mean, you're going to have, Jane Frederick in Nixon, Missouri, say, well, I'm going to give my lawyer my private key so he can go take care of all of it. Well, you don't then have your asset anymore. Your lawyer actually has the asset. There's not like a court that says, anything. So it's what you're really exchanging is value. I mean, whatever that digital asset represents something, you wouldn't have traded it, right? So it fundamentally creates this internet of value. These are all basically different information systems, but this is fundamentally a value system. And you need to think about it as a value system. So the three main, there's trustlessness, which is the same as consensus. There's immutability, which means unlike Jeff Bezos, who can, push out new software every 30 seconds, and, he sees you clicking this way and he wants you to click this way, then there's some completely new system. With immutability, once you release your software, it's very hard to take it back, essentially change it, get everybody to redeem their software and issue new software and all that. It's out there. There's immutability, there's consensus, and then there's the third is the decentralization. So it's not dependent on a centralized authority. So value is what we were just talking about. So before the blockchain, for all of us entrepreneurs, we were dependent, whether we were aware of it or not, on the capital markets. The capital markets, since the merchants of Venice, have been rigged, right? So it's, by very definition, you have the people who issue securities who need the money. You have the investors who put the money in. Very little, relatively little value winds up here, and relatively little value winds up here. So let's run the venture capital route. And I've had, on my fourth company, I've probably raised close to $100 million in venture capital. It's, they're very nice guys in these ski chalet looking things on Sand Hill Road, big bright conference rooms and all that. It's really, they're just deal flow guys. I mean, they're like the teller, at your bank. They make a lot more money than the teller at the bank, and they wear Patagonia vests. But besides that, what they're really doing is, it's all about the limited partners. They care very little about the issuer. It's getting that 15% internal rate of return to the guys that put the money to give them the $300 million to invest. So that's what they're really about. They're really just deal flow to that. Now, to get liquidity, to get the return, you've got to issue securities on Wall Street. There's going to be a brokerage house that's going to do that, Goldman Sachs or a JP Morgan, Chase, or whoever. And then again, you have all these end-of-the-road investors who, by the time it gets there, these guys are way out, long out of it and all that. So that's the equity side. The debt side's no better. I mean, if you go to the bank, if you can even get a loan for your business, it's almost always because your mom and dad had borrowed lots of money over time and paid it all back, and they're going to have to co-sign for it anyway and all that. So there's very little risk. But again, the real money is the funds that come in, and they're going to want the 12% or 13% IRR. Ultimately, you're going to bundle all these loans and do different tranches and sell them on Wall Street, and the brokerage will do it. And you might have the same guy who just borrowed $40,000 might have $10,000 of that in their IRA. But there's no reason for it except the fact that we've been dealing with these paper-based agreements for so long. My first company was in the secondary market loan trading business, and they're talking about, boarding loans. And they talk about it as boarding loans because they used to carry them out on boards, and wet loans were, hey, it's still wet, That literally is how it still operates today, okay? So how is the blockchain totally changing that? Well, you don't need any of that anymore, right? You only need the two entities at the front end and the back end, right? So issuers and investors, why do you need anything else? So basically, it's an incredibly low cost of capital, high operational efficiency, and all this transparency. And the capital markets they always talk about information asymmetry. You know, those guys who are running the hedge funds, I don't know if you watch Billions, but it's always about how do I get that information that nobody else has? How do I do it without getting caught, essentially, you know, because there are rules around, you know, insider trading and all of that. But so it's basically a system where everyone's trying to cheat it. Well, now you have you basically have this blockchain. So every transaction is recorded publicly, and the issuers state the rules in this smart contract in software instead of putting the rules on a piece of paper, and it can't change. So the investors can then trade them between each other, can send value here, and you basically have a completely different system. So what do we do with that system? And first of all, who does it benefit? So the investors and the issuers, what's so different about this than the other system is investors have rapid liquidity. So my long-suffering father in the fourth row, you know, has invested in my startups, invested in startups, right? So he, bless you. You know, if I come to him with an idea and say, hey, here's, you know, a convertible note, right? Someday we're going to raise venture capital and you're going to get a 10% discount to that, right? Well, basically, he's at the mercy of these other people, and then, you know, 3 years down the line, there's some other venture capitalist who then adds all this, you know, preferences and all that, that someday when the company gets bought, he might do well, he might not do well. You know, there's just too much that you just don't know. But here, if he invests in something that's going to be tokenized, there's very rapid, you know, he doesn't like what's going on, or he just needs the money to go on vacation, or, you know, to buy a beach house or whatever, he can sell that on the exchange. So rapid liquidity, periodic distributions is really important. There are a lot of coupon clippers out there, you know, who invest in things to get a yield, or to get dividends. Here, you can start, your interests are aligned, because on the blockchain, I don't even have to know who is holding that token. There's a standard called ERC20 that allows you to trade tokens. Well, so let's say my dad sells his tokens to CJ. We're at the end of a quarter. In the investment contract, it said we're going to send out 50% of all of our profits to all the token holders. Those automatically go to CJ instead of my dad. And so there's it's just very easy to maintain all the books. You don't need a CFO with his cap table, and you don't need, you know, to calculate how much interest, if it's a loan agreement or whatever, should be paid back. It's software. The value is inherent in the system. You write the rules, and then it all just works and flows. And then reinvestment plan. So it's great. I mean, let's just say in this room we wind up having 10 different issuers, right? And you all do well, you get your tokens issued, and people are getting the distributions, and they say, okay, I want to go and reinvest that back in this token and basically be Warren Buffett, where I get compound returns. Or I want to go put that into another token. The entire ecosystem starts building value. And then issuers, you have creative freedom, because you're really, all of a sudden, all of us issuers, instead of being, you know, the old school Jack Welch, who has, you know, or the old startup who only has to worry about a board and, you know, keeping your board happy and keeping your investors happy. All of a sudden, you're communicating with an audience of investors who are also your fans, who want you to succeed. They might be customers as well. So essentially, marketing to investors and marketing to customers becomes very similar, very parallel processes. And so the reason so instead of being Jack Welch, or instead of being, you know, some startup guy, everybody sort of has to become an Elon Musk, where you can screw up all the short sellers just because the people who are buying your cars and who believe in, you know, your mission, they're going to keep your stock up there. I mean, they're not, you know, going to liquidate because I know someday it's going to go well, and it just frustrates everybody. It's like, well, the comps and this and that, and ultimately, you could be a seed stage or an early stage company and have all these investors out there, and you have to communicate with them and keep them happy. And that gives you a tremendous amount of creative freedom, because you say, hey, we're going to go in that direction. You know, like, what public company CEO besides Elon Musk would say, hey, this zombie apocalypse might happen, SpaceX is going to start selling the flamethrowers, exactly, right? So we're going to do that, but there's an incredible creative freedom when it's not just, you know, these investors who know way more than anybody else has ever known in the universe because they have a fancy office on Sand Hill Road and they have their Patagonia jackets. You know, those guys absolutely know everything. But here, it's a crowd that you're communicating with. And that also leads to the community support and ultimately very friendly terms. This is something that's been really interesting working with experienced entrepreneurs on this. It's almost like we all have Stockholm syndrome. It's like, wait, I can't come up with my terms. What do you mean? This investor is going to give me a term sheet and is going to keep whacking me over the head until I sign it, and it's, you know, it's not like I can go to another VC because they're going to say, wait, you didn't take the money from this VC? I mean, it's basically, I don't know if you're familiar with RICO, you know, racketeering influenced corruption organization, but that is what venture capital is. You know, I mean, it really is. It's like the oldest possible racket. You start here, and it's got to go to here, and you know, and it's all the others' deals because they're all trying to save each other from these other crappy investments to make all their portfolios work until finally you know, they manage. I mentioned this last time. It's like the worst kind of factory farming where they're just pumping up all of these crappy companies, you know, with the equivalent of steroids until they finally, you know, push them out onto Wall Street, like the Marshmallow Man and the Stay Puft Marshmallow Man and Ghostbusters, you know, lumbering down. Okay, so you can say they're friendly terms, like they're terms that you want as an entrepreneur, but you also have to remember you have to align your interests with these investors. They're not going to negotiate with you, but you want them very, very quickly to look at it and say yes, right? So we're going to talk about what those are and how this is different from equity. If you go to crowd sites right now, if you go to Start Engine, if you go to Republic, if you go to Indiegogo, those are equity crowdfunding sites. So the first thing you see is what's the valuation of the company, right? So you have to, as some Main Street investor, some retail guy, say, this company, yeah, it makes sense, they're worth $8 million. Well, how? I mean, there's just no, so if I put in $150, I own the share, so I do well if this company suddenly sells for, so like, it's all these things you don't understand, and you don't have a basis to understand. So what we've done is come up with a set of terms on the investment contract that doesn't have anything to do with valuation. It just has to do with how well you operate and how quickly you get to profitability, which is really important. I mean, I just remember the first VC, this was in the height of the market, this was like 1999. Actually, Chris Carter was my lawyer back then, he's here. I don't know if you were in that meeting, but I won't say his name, he's still a VC in the area. But I remember him at the meeting, at this board meeting saying, you're not a player if you're not burning $1 million a month. Right? Now, I mean, you had companies going public on, you know, $5 million of revenue, you know, and getting $200 million of multiples, you know, or $200 million valuations when they go public. You know, so it was a weird time, but that's still kind of there. They don't really care. They have a portfolio. They don't really care if you crash and burn. Because all that really makes sense is that 2 out of the 10, you know, give them 100 baggers, right? And so the only way to do that is to make sure you spend. So the investment contract, you really want to align your interests. You want to basically say to your investors, we're going to build a company together, right? We're going to do well together. I'm aligned with you, and this is how it's going to work. So some of the issues on our platform, if you go to Indeco, ind.eco, you'll see there are distributed energy companies, machine learning companies, medical notification, food and beverage, AR, smart cities. One of the things that's interesting about this is security tokens are not just for blockchain companies. And in some ways, you'll actually see, and CJ's going to be talking about this a little bit, you're kind of at a disadvantage if you've been thinking about this too much in the old school cryptocurrency world, where there's this asset or this cryptocurrency. So there are basically 3 categories in the universe of blockchain. There's kind of blockchain technology itself. Like I can do all kinds of things, like CryptoKitty is what they call a dApp, right? So it's this genetic algorithm where each one's unique and people were buying and selling these, you know, basically breeding cats on the blockchain, on the Ethereum blockchain. So that's a dApp. It uses a particular, you know, standard that makes that work, right? So you can sort of deliver. Walmart has applications on the blockchain. FedEx has applications on the blockchain, right? It's just a platform. Then there's cryptocurrencies, which are like, you know, Ether, Ripple, Bitcoin, which are really units of value, and that's what they're for. They're either for storing value or transacting, transferring value and all that. That's what they're really good for. People got their streams crossed by wanting to raise money for these essentially value exchange companies by pre-selling the thing that was going to create the value. So Filecoin is a great example of that. It's ultimately going to be a utility token that allows you to store, instead of storing it on the cloud with Amazon or Google or Apple, I can store it on all of these laptops and cell phones and everywhere around the world, and I'm going to pay with Filecoin, so people who you're essentially mining your own disk space, right? So that was a cool idea for the blockchain, but they basically pre-sold $230 million of these things, and now they kind of have to come up with a way to make sure that there's that much value extracted, you know. And as the price of disk drives go down, like, it's like you didn't really think about all the economics very well. Whereas if it was separated and said, hey, we're going to raise money for this business with security tokens, and once the business is operating, we have this whole distributed system, the two could work really well together, the utility tokens and the security tokens. Yes?
So these issuers, were they doing the issuing all the way from their earliest dollar in, or was there some natural dollars that already came in the old way and then they issued new tokens here? What
Some of
mixture
each,
is that?
some of each, yeah. And it's certainly harder, and you're going to actually hear from one. Joe Rogers is here from one of the issuers that actually started the road before he found us of doing traditional equity capital. So he essentially did your typical convertible promissory note, crowdfunding with a safe plus a rev share. When we looked at it, we actually said, you know, a safe plus revenue share is essentially the same as an investment contract, right? So that's something really easy to tokenize. Like I can distribute. So that turned out to be a fairly easy one. There are others that are coming to us now with, okay, this is a little more complicated. There's one we're working on with CJ where they had just a brilliant model that was all utility tokens, and they were gonna, essentially do this SAFT and then launch the utility token. And once they realized that just separating those things was gonna give them that ability, they could do it early enough. But it is harder. We've talked to others that are pretty far down a different road, and it's hard for them to dovetail. But not always. Like, I had a call with a Silicon Valley VC like 2 days ago, and the ones who are smart about all of this are saying, okay, well, I might have already put $5 million into this company as equity, but now this company doesn't need to go, my equity doesn't have to ever be diluted anymore. Like, these guys can do a security token, raise $50 million, and keep those investors happy, never even necessarily need to IPO. We can then, someday sell the company or do whatever. So it is ultimately backward compatible. It just takes a little more thinking than just the happy path of, I'm going to do a token pre-sale and then a security token.
But you don't think that there's anything outside the realm of possibility? So we are, for example, our company is in digital health. We've raised 1.25 million, 750 of real capital equity, and then about 500K in a promissory note. And then, and now we're going for a Series A. So you could leave that bundle alone the way that it is.
Absolutely.
And your Series A, 3 to 5 million that we want to raise, we could do through tokening.
And the nice conversation at the board meeting, and we had a board meeting where, it took us hours to figure this out, because you have to design your token so that, and the board has a fiduciary duty to shareholders, right? So you have to figure out, well, if I issue this token, are the buyers of the token gonna be nervous that we're basically rigging things so that all the value could really go to the shareholders?
Mm-hmm.
Like, we could as a board just say, do Hollywood style accounting, where if we said, hey, we're gonna distribute this amount of our profits, but we're basically, are doing this other thing, so they don't really ever get any money, but, it goes over here, you can do that. So we've came up with different ideas in this. So for our token, and this, I want to do the disclaimer, this is kind of interesting, I probably should have done it at the beginning. We do have a token pre-sale live right now. One thing that's interesting is, the reason I'm recording this is because I have to then go put this video on the website, because everything that I'm talking about, our own offering, every person out there in the internet world, if I don't give them the same information, then the SEC can, put me in an orange jumpsuit, right? So you have to think differently, about this. But basically for our offering, what we said was, well, those early token investors are helping us establish the company, so we're actually taking stock, and we're going to distribute it pro rata in this investment contract. They're not actually going to hold the stock, but basically we're creating this pool of stock so that there are contractual rights to the stock with whoever is holding the token. So basically, if we do go public, then the token value goes up because they basically hold the stock, and then if we get bought by whoever, Goldman Sachs, then the money actually flows to the token holders at that point, because the stock is no longer in the market. And we worked out things like redemption rights, just in case Goldman Sachs says, hey, I don't want to give this big share of the profits, but those guys can all then, there's a way that they vote on whether the price to redeem all the tokens. So it took a lot of thinking, but once our belief is, all of these new issuers we talk to basically stress test it. They're like, well, what if? And all it does is show that, all of these gray hairs from dealing with venture capitalists over the years, it really did come up with something that's fundamentally different, but it addresses all the needs of that old world. So I want to make sure we have plenty of time for the. So ICOs themselves, initial coin offerings. What made those so fun was the user experience. And basically it was these things. Like it's crazy. I mean, you wouldn't think that anybody would call a Twitter account, pump and dump, right? But there were millions of them. And there were Telegram channels where everybody okay, everybody buy, everybody dump. It wasn't even, and I was going to these, there were these crypto dinner clubs, where in Las Vegas, where everybody who was there was a poker player, and they're all cash bases. Well, it's crypto. There's no, we can do this Ethereum, and this happens and that happens, and we can trade directly between our wallets and all this. There's no, it wasn't even in their minds that they might be violating securities laws. There was no, and I was there saying, well, we're going to do this security token, and there's going to be this thing, AML KYC, anti-money laundering, know your customer, and they're like, we're poker players. This is the cash business, right? There's no, I'm not going to declare anything on my taxes. I'm not going to, that doesn't make it, it wasn't even conceivable to them that this was not going to last forever. But this did not last forever. So the idea is how you take all these fun things, right? So the Floyd Merriweathers and the Bjorks and the Paris Hiltons, and the token pools, which is basically, hey, we're all gonna buy in at a lower rate, right? And then we're going to promote it, on our YouTube channels and all that, and get it out there, and and then the airdrops were really fun, which was just, hey, we're gonna get this big list of Ethereum blockchain addresses, and we're gonna just everyone's going to see in their MetaMask wallet, hey, I have, 10 of these new coins, and it says that the value is 50 cents. So they just distributed 50 cents of all these coins. And then people hey, it said 50 cents yesterday, and now it says 60 cents. Maybe I'm going to buy more of these. So it was a way to market it. Which made sense if you didn't have to comply with securities laws, right? So the question is, how do you go from the hype machine to essentially machine learning and all of these things that you can do with computers, and still keep it compliant? So all of those, going on Twitter or Telegram, where if an issuer said anything to anybody in private correspondence, right? And that person then went to an exchange, an SEC-regulated exchange, they're called ATSs, alternative trading systems, like Open Finance Network, T0 is coming out with one, Coinbase is going to come out with one, Templum. So there are going to be all these regulated exchanges. Well, if I was on a Telegram chat group, and I sold a token to somebody who was not on that same group, then I, as a seller, could be accused of insider trading because I had inside information. So we needed to build a platform, which we basically think of as the Bloomberg of this new security token world, where you don't have to worry about what you talk about because people are going to be able to see it's part of our investment contract, our tokenized investment contract specification, that other person who buys the token has to know where all of the information is. There's basically a reference. It's the equivalent of a blockchain click-through agreement where, this guy says, hey, I don't have any information except what you have access to, and here's where all the information is, and now nobody has to worry about it, right? The SEC literally can't come in because this is an immutable blockchain ledger, and you really have to go out of your way to screw up, right? And performance metrics. So we all now have these. So Joe and I both have offerings available out there. Well, how is anybody going to know how we're doing, right? So you want a system where regularly, if I'm, if part of this is profit sharing or revenue sharing, why shouldn't I have one button on QuickBooks where I can sort of publish an update? Or, hey, I just closed this deal with IBM and, we had said we were gonna do 5 of these deals this year, this was number 2. So how you're doing against it, so there's metrics that investors should care about: customer acquisition cost, lifetime value of the customer. Things that aren't GAAP, these are early stage companies, that's what matters. It's not price to earnings ratio. We want to publish the right metrics, again, in this sort of Bloomberg for crypto model. The valuation basis, right? So it's not comps like you do in the public markets. Well, I'm an e-commerce site, Amazon is worth this much, so I have, 1/millionth the revenue, so I should be valued at 1/millionth of Amazon, right? That's not what it's done. So every investment contract is going to have a different valuation basis, but every investor should know what that is. And so that's something you can only do with computers, or you would basically this is what would drive investment bankers crazy. And then the token economics, which really goes along with that. So we created a very simple spreadsheet model, which we're now moving online. But basically, as an entrepreneur, you would be able to just put a couple things in. Here's my projected expenses, here's my projected revenues, here's how many tokens I think I'm gonna sell. I'm gonna do, I'm gonna raise 5 million and then here and then there. And so you can then say what the money multipliers are on all those tokens. Like, based on simply what the distributions are likely going to be. So if I bought this token for 50 cents and I'm getting, a penny every quarter, that might be good. I mean, you have to think about it more as, I put in $1,000 and I'm getting, this amount every quarter. If you think about it, these are perpetuities, so it's going to be a much better return base, and the secondary market should be trading based on the companies that are distributing more to the token holders. So if I basically paid, if I put $1,000 on CJ's company, and he's giving me $50 a month, that's crazy. There's almost no other business that's going to do that. But if you think about it, if I was able to invest just in Amazon Web Services, they have the margins where you would probably, that would be an incredible security. So anyway, you have to think about it differently, and this is a way, and the social signals and alerts, all in a compliant way. This changed, this is this price, all of that. So you have to totally shift your thinking, and what we're trying to do is just putting that all on one system so that, again, it's just like a Bloomberg and I know how to interact with it. Corey, do you have a question or a comment?
Yeah, thanks, David. Just popped into my head here as you're talking. Has anyone talked about or already done something where they have issued different tokens for different security types, specifically where you have maybe a higher initial cost for some kind of prime token versus a debt token, and then maybe different terms on that debt for short versus long-term cash flow, things like that?
So the really cool thing about this is that there is not a single security token that has been qualified by the SEC and issued by an entity, right? So almost nothing has been done. I know a lot of people who are talking about what you're doing, and there probably, I've heard that the SEC has qualified about 5 offerings, but the offerings aren't out there yet, and you don't have to file publicly until you have to issue it, so you can file privately. So I know of a lot of different, there's a pretty wide range. So, but part of our idea, we think it makes sense for an entity to issue multiple tokens. Like, you know, for us, the first one is all based on our platform, right? That's all we have, and it's based on this. But let's just say we come up with another model. Like, what if we wanted to monetize different things in our organization, which is just what Amazon did, right?
Yeah, exactly.
So let's say we wind up building this brilliant sales force, and that sales force should just sell all kinds of stuff. Well, we could issue SaleCoin, right? And all of a sudden you have this great group. Sure, they're selling our stuff, but they're also selling all these other things, and they're giving another return. So it is the magical money machine. Like, I used to really think in the very beginning when Chris Carter explained to me what a convertible promissory note was, and you know, you could basically print it out on your printer and give it to somebody, and they give you, you know, $50,000. It was like, wow, this is magic, you know. This is even better because with the convertible promissory note, you either had to pay it back or you had to get a qualified investor in a particular period of time. And I can't tell you how many times. Like, my last company actually, you know, we had raised about $1 million in convertible promissory notes. I mean, just tin cupping, you know, 5,000, 10,000, whatever. And it was like, you know, a 1-year maturity date. And getting a qualified investor in before I had to go back to everybody and say, hey, I don't have the money, you know, we've got to do this. Like, that was always a pain. But here, you're not just, I mean, you're basically defining the whole thing, and it's totally within your control about how to succeed or not succeed. Make sense?
Yeah, and tell me to shut up, because you know
Okay.
where you're going. Any run into any roadblocks with employees of customer organizations purchasing coins or any goofy stuff like that?
Yeah, I mean, Coinbase was accused of insider trading. I don't know what came of that. The way we're trying to help issuers is with this. This method puts the onus on the seller. Like, so if the seller has said, you know, essentially in this click-through agreement on the blockchain, I don't have any information that I'm trading on, you know, and they actually do, then at least the company isn't likely to be taken down. So if your partner, I forgot his name.
Oh, Sam.
Sam, yeah. So if Sam does this, you know, it won't come back on you and everybody else. So you can't say it's not going to happen, but this is basically a way to protect from it.
I meant my customers. Like, if my customers, their employees, suddenly have access to equity in my company based on the availability of a security of my company in the form of a token.
I mean, that's just a good thing, right?
That's all I'm asking. Like, there's not any like newly introduced risk there.
No, it's what, so that's the interesting, the companies that do well, so if you look at the statistics so far in crowdfunding, a full 18% of every dollar that's gone into crowdfunding, it's the single largest category. It's bigger than tech, it's bigger than mobile, it's bigger than anything. I mean, tech, you know, including mobile. 18% is in food and beverages, okay? And terrible investments, right? But people, you know, my local restaurant, I love it. They just went on Start Engine to raise a bunch of money because they're going to franchise, right? So I'm a happy customer. I'm going to go ahead and put $150 and be a partner. And you know, my brother happened to be an investor in Redwood that, you know, went out of business, but he probably ate enough on his little platinum card that he got his investment back. But that's what, you know, so you really want to encourage your customers to have a stake here. It's like what we used to do with revenue warrants. You know, for early customers, hey, you know, for every $1 million you pay us, you're gonna get warrant coverage. You know, so if we do well, you know, you get this big uptick. That probably hasn't happened as much as it did when, you know, there was the big bubble in the tech markets, but I mean, you just had all these weird, Priceline went public and all of a sudden United stock went way up because they happened to have warrants and that. So no matter how you do it, as long as you are conscious of the fact that this is going to be a new dynamic, getting your customers to also be investors is a good thing.
Thank you.
All right, so we're going to speed through these last things. So, 3 major exemptions you want to think about. So, exemptions from registration are important because you do not want to be a public company if you don't have to be a public company, right? There's Sarbanes-Oxley. I mean, I'm sure before our current president gets out of office, most of the protections are all going to be, ripped away. But still, I mean, you just don't want to go through it, right? So if you don't use one of these exemptions, then it means you do have to be a public company. There is a 4th exemption that a lot of ICOs are using, which is Reg S. Reg S means I can sell my security anywhere except in the US. What that also meant is if I'm an Australian company and a US investor buys my token, I can still be, the SEC can still come after me. So I thought it was a crazy idea that all of these ICOs were issuing under Reg S. It just seems like, it always seemed nuts to me, but it apparently, I mean, you can think about it though. I mean, hey, I just raised $200 million. I'll just go move to Brazil or Gibraltar or whatever. Yeah.
So I just looked up your company. I see you're raising money. What exemption did you use?
Okay, so right now we're under Reg CF, and this is what we recommend is use CF as a token pre-sale. Because you can sell, anybody in the world can invest in it. You can only raise up to $1 million a year. And we're going to talk about the actual security we recommend for pre-sales. Like, you can do an actual security token offering under Reg CF, but doing an actual token offering and only raising $1 million, it's a lot of work to only get $1 million, right? So the pre-sale we recommend using Reg CF. Yeah.
So you're raising money from retail investors right now?
Exactly.
Okay, and how much money did you spend on legal compliance?
So we are very unusual because we basically had to invent something that was going to pass muster, okay? So we spent way more in legal than probably anybody else would, but because we're a platform now, basically all of these forms, we just, let's say you wanted to follow the same path, you could take everything we've done and just change a few things, okay, I'm inserting my white paper or my business plan, right? I'm gonna say instead of doing this amount of rev share, I'm gonna do this, instead of doing this amount of phantom stock, etc. So our goal is that this would actually be completely free for everybody. Like, this shouldn't cost you any money.
So a company on your platform, you don't think will spend significant amounts of money on legal costs?
I think to do this, the only money you should spend is you do have to have an independent accounting review if you raise more than a particular amount. I think it's about $500,000. I'm not sure, 200,000.
It's $500,000. And how much do you think the average issuer would spend on those types of costs?
So we found 3 really good crowdfund accountants, which have just given us a flat rate. So they basically said an accounting review is $1,000, an audit is $2,500. Right? You'll need an audit for when you do the Reg A Plus. So if you're pretty sure you're going to do the Reg A Plus pretty quickly, then why pay the $1,000 and later pay the $2,500? That should be the only cost. Now, it's the portal is responsible, they have a duty of some due diligence. So there's a chief compliance officer of the portals that you're gonna go live on, that we have relationships with. So they're familiar with all this paperwork. I would still say, and particularly if you have a board of directors, you're still probably gonna want a lawyer who you've engaged to read through this. So we also have a recommendation, right now we have 3 law firms who, they range from $250 an hour to $350 an hour. If you don't change what we've done very much, they'll probably just, read through it in 2 hours, and so you'll pay another, $500. You don't have to do it, but that's another thing that I would just say, hey, you're gonna raise, from non-accredited investors, I'd spend $500. So I'd say all in, you're talking $3,000.
Okay, and then are there any ongoing costs?
No, what you do is you pay, again, we're just talking CF now, so
Right.
you're gonna pay the portal itself 7% of what you raise. So if you raise $1 million, you're gonna give them $70,000, but that comes out of the escrow as the money's coming.
Okay, but after the money is raised, you're saying there's no ongoing compliance costs?
Nope. Seriously, what I did, so I've done 4 crowd sales so far for my own companies, not for others. And seriously, the most liberating thing ever. You're like, why did I ever do it this other way? It's just, and literally, like if you do not have the $3,000, and you can find any CPA to do an accounting review, right? So you don't have to do these crowdfund ones, as long as you haven't hired them to do your taxes, and as long as you haven't hired them to keep your books, then they're an independent reviewer, So really think about, this should not cost you any money. Now, this is gonna cost you money, so the idea is you're gonna wanna put in your use of funds, if I raise, you basically might say 20% of what I raise here is gonna fund this, right? So if I raise $1 million, 200,000 of that might go into all of the work that's gonna have to do the Reg A plus,
Okay,
right?
so if I
Includes
wanted-
the marketing, et cetera.
If I ultimately wanted to do a really big offering, let's say $100 million, and I just wanted the $1 million to get me to a place where I can do $100 million.
Exactly.
This is the number.
Right.
And to get to the Reg A part, I'm probably gonna spend a couple $100,000, $1 million.
Well, and that's another thing that we've tried to. So my last company, it was before the whole token thing, and we used investment bankers, and we used expensive lawyers, and we used,
But it sounds like that's what
Yeah.
you're gonna be doing.
right, the old school way cost hundreds of thousands of dollars.
Right.
We think we've gotten it down to about 25,000.
Okay, but even still, like, that sounds like a lot of work. Why should I do that instead of doing, just completely skipping the security token model and doing the Reg S model? And yeah, I realize that there's some compliance issues, but I don't see the SEC stopping anybody, right?
They're stopping people. Seriously, it's totally up to
Keeping
you.
like 300 companies, ICO records, man.
Yeah,
Yeah.
they're taking their time. They want to go through that. So if you came up with a technology that did real geofencing, or had some sort of way to enforce the compliance, and then you still have to market. If you look at, I don't know how much longer, you look at all of these coins, they're called S coins. This is going to be out on the internet, so I don't want to use the expletive deleted coins. I think it's going to change where everyone's going to say, why would I use that old model? Because if this guy didn't even do the work of qualifying it, why would I trust him? It could be some Croatian, how are you going to cut through the noise of all of those and do this other way? Like here, I just don't think you're going to be able, this isn't 15 minutes ago. Like, are you going to be able to raise $100 million under Reg S? Good luck. It's going to be hard now. Where under Reg A Plus, you're gonna be one of the first, where Mrs. Jones in Nixon, Missouri, could get a recommendation from her, financial advisor and invest in your token and look at all of this stuff and say, wow, these guys are qualified with the SEC and all of this. It's only cost, again, if you do it, like I said, $25,000, and Tom is gonna say, no, it's gonna cost you a couple $100,000 because he's a lawyer. But, so let's hear Tom's.
I'm listening to every word.
Just mention the 50 million.
Yeah, so what I want to say, because you did say it, but I just want to say it more explicitly, is that as far as I know, there has been no Reg A Plus offering approved by the SEC for any token, right? Now, I know a couple that are going through the system, and we're not doing it, but the lawyers that are doing it are telling us they are getting dragged through hell.
Exactly.
And it is not going to be cheap, all right? Not cheap at all right? So because what happens when you get a Reg A Plus approval, that means they basically have approved your offering, and they've looked at all the information that you're disclosing and saying, here's a stamp of approval. So it's not a no action letter, but what it is, it's saying that this looks good to us, and we're gonna let you go. So they are just very tough on those Reg A pluses. Now, on the Reg D 506C, there is another one also, it's 506B, and it's basically the same thing, but it allows you to sell to 35 non-accredited investors, all right? So those, we sometimes call that the friends and family. So, your neighbors and, hey, Joe's doing it all, yeah, I give my, $2,000 or something like that. So you also got the 506B if you wanna go that route.
Yeah. So I do agree. I mean, so our law firm that we use is Mayer Brown. They're one of the, top 20, they're a big firm. One of our partners was at the SEC for 10 years or 5 years or whatever, is, a senior attorney. So the reason I'm saying I hope it's not expensive for you guys is because we're doing that, butting up against the SEC and getting comments and going through it. So, but our sense is, again, if they qualify this and say this is fine, and all you do is change specific terms, don't change the security, how can they say, hey, we qualified Indeco and we qualified this next one, so we have another that's they're skipping the Reg CF altogether. We have another customer that's going straight to Reg A Plus, and they're using our whole template that we're, arguing the SEC with. So it would be hard by the time you get, and we recommend, so you might have this Reg CF in the market for 90 days. This might take, the Reg A might take 90 to 120, it may take 180 days, right, to get it through. So I would almost file this and then file this very quickly afterwards, because they have 30 days to come back to you, and you're going to draw comments, etc. So that's the idea. Yes, you can have a fantasy that there's some easier way to do it, but this is probably the way to do it. The only thing I just wanted to add on the 506C versus the B, in the Jobs Act, it really made, and this is something our platform shows, which is there are no integration issues. So you can be running these two totally at the same time. If you do it under 506C, you can advertise like crazy. Whereas if it's under B, you have to be really careful. So this is more attuned to this whole model of crowd selling, right? So you can market, and then all you have to do, and we have an API on our platform, so if you do this through the platform, they just click and they go through an investor verification process. Once they've done it once, they can invest in your token and your token and your token and your token, right? And they're already accredited, and it's just as easy as doing it here. You can also do different terms for each, so you can attract, get people here to put in $100,000.
Yeah.
So there are mechanisms, but yeah.
So one more question, I realize I'm dominating.
That's good.
Being very rude. But one more question. So you start off by saying you've raised over $100 million and you're a serial entrepreneur. So clearly you have connections to some type of investors. Why aren't you talking about using 506C, like even doing a regulated regulation
We are.
crowdfunding and doing, oh, you are?
Some of our investors are actually here.
Okay,
You know, so my idea is all roads at once,
okay.
right? So that is the message. Like, and people come to me and say, you know, hey, we're gonna do this. Does that mean I don't have to talk to VCs anymore? I'm like, no, you know, like, you have payroll to meet, right? You know, I mean, if you know, if you gotta meet payroll, you gotta get your money from somewhere, and this might not be coming in as fast as you thought, but you have this in the market, you know, and again, I mean, I'm pretty shameless, you know, yeah, I'll call the old, you know, my old investors and say, I've gotta make payroll, if you wire me, you know, $25,000 the next 15 minutes, I'll double the warrant coverage. You know, you can do that, under here you can do whatever you want, because the SEC has basically said, as long as they're accredited, they're sophisticated enough to know whatever, so you can alter the terms and do whatever you want. Yeah.
So with Reg CF, doesn't the cap table get messed up with all these investors from all over the world?
That's the beauty of this. This doesn't affect your cap table at all, because you're not selling stock. You're selling investment contracts. So even with our Reg D 506C offering, we're selling investment contracts, but because they're more sophisticated and they want the upside in the company, they would put money into, you know, we give them warrant coverage, right? So they're gonna be people, they're not even on the cap table now.
No, that's for Reg D though, but for.
Right, but for Reg CF, what we did was, I mentioned that we were giving away stock with the tokens. What we did is we created a pool of phantom stock. So we basically said, all of this stock, let's say it's 200,000 shares, right, are going in this pool. If we raise $50 million in tokens, that is essentially owned pro rata by all the token holders, but the token holders are not on the cap table. There's that 200,000 shares sits on the cap table as phantom stock owned by all these token holders. It's not even owned by all the token holders. They just have the contractual right to the benefits. So if we ever sell that stock, if someone buys the company, if whatever, then the money flows to whoever's holding. So all they're saying is, hey, I'm gonna keep holding this token because the company's doing well. If I sell the token, I'm gonna get the value because this person who buys it is saying, hey, the company's doing well. So, you know, we're playing musical chairs. I wanna be holding it when the company goes public or gets sold. So it doesn't screw with your cap table at all, but the investor still gets the benefits. So, I mean, it's really, that's why we call it the magical money machine. I mean, it's seriously, the more you look into it, you're more like, why didn't we have this 10 years ago?
And then for Reg A+, won't the T-zeros and Coinbase have to be in existence before you can actually do a, you know, reasonable Reg A+, and people will actually participate in that? Because if you do a security token raise with Reg A+, you have, and you know, for secondary trading, you have to be on a regulated exchange. And today, there are no regulated exchanges either.
Well, there is one, and that was the key for us. You know, all you need is one. So Open Finance Network, they're at openfinance.io. They are, yeah, well, I gotta speed up. They are a regulated exchange, okay? And they have a security token standard, and they have actual tokens, I think 3 right now, that are available. And those were all Reg D that were issued, but after a year, a Reg D, I could sell to a non-accredited investor. So they're already providing liquidity. So again, it's not optimal. I mean, there aren't 4 or 5 exchanges, but there is one. So at least, to me, it makes it comfortable for me to issue, because at least I know that someone can make a market in it. Okay, let me speed through this because I do want to get you guys up there. So the investment contract, there's a share of revenue or profits, there's rights to stock benefits and redemption rights. The pre-sale agreement we call the DUSTO, which stands for Debt Until Security Token Offering. So if you guys wind up doing that, the things you would change is the interest rate. On ours, it's 15%. You know, we thought, hey, that'll sound good, right? Hopefully, we're going to issue our tokens in 6 months. So 15% interest for 6 months isn't a lot of money. Timed or the size of bonuses. So what you'll see when you go to the site, it says, there's 18 days left for you to do. That's one of those fun things from ICOs. You can now do that with security tokens, and so drive people to that. And the maturity date. So you're basically saying, I think we said, hey, we're going to do the security token offering in 3 years. But those are really 3 little things that you'll probably want to change on the DUSTO. So basically, we did the very first pre-sale under Reg CF. We did it on Start Engine. The reason we wound up partnering with this company, TrueCrowd, and setting up our own platform is just that both Start Engine and Republic and Indiegogo, which were the only ones that were doing token pre-sales, all in my mind had completely different views of what a token pre-sale was. So one came up with this idea called the rate, which is basically I'm going to buy equity and get free tokens. The other had this DPA, which was basically debt payable with assets, which was sort of like a SAFT. It just didn't solve the problems. I mean, they really weren't. They still hadn't separated the world of security tokens and utility tokens without screwing the whole thing up. So we did this, but as Tom said, there are no security tokens in the market yet, right? So we want you guys to be in this first ones. So the other important point of this is that we talked about the Internet of Value. It's also the Internet of Values. I mean, almost everybody I meet in the blockchain world, like Joe has a public benefit corporation. Indeco is a public benefit corporation. We're basically saying that our board has a duty to the greater community of all beings, right? Not just shareholders, right? So, and we really, I mean, CJ, is totally passionate about liberating people from the violence of state fiat currency, right? I mean, really, almost everybody you meet in this, and so I really think that the blockchain, I mean, we all thought Web 2.0 was going to do it. It turned out to be completely the other thing once, the Russians and the Israelis and everybody, the Saudis all got involved with playing around on the social media systems. But this way, there's a lot less ability to tamper with everybody's consciousness. Okay, so basically, if you come to our site at Indeco, you can see, and you can do this right now and become an investor. So this is sort of the walkthrough of clicking on ours. So you see this, you can invest, you can boost, you can follow, you have to register. This is where we separate the dolphins from the whales. Whales are accredited investors, so you have to have a net worth over $1 million outside your home, your primary residence, or annual income of what, 250,000 or so, yeah, or if it's with your spouse, I think 350,000 or whatever. But so it basically sends you to, so if you're a whale, it sends you to a site where you can download the PPM, you can go through the investor verification, you can set up a private meeting to go over this. Under Reg CF, you're not allowed to talk to me at all as an investor, right? I cannot give you any information that's not on the website. So we can talk now, as long as I then post that on the website, on this funding portal. So basically, this is if you're a non-accredited investor, then we have this site that we partnered with TrueCrowd to develop. They're responsible for everything on the site. They're the licensed intermediary, et cetera. But here, you can see there's the time bonus. So you have 18 days. And this we're launching today. I mean, we just filed with the SEC and everything, so there's exactly one investor that happens to be the chairman of our board. Paul, he wanted to test the system before we came out here. Paul Feldman, before it worked. So anyway, you can be investor number 2. And you know, we have plans. You know, the hard thing that we realized after having done 4 crowdfunding, all of this stuff, it all sounds complicated. It's incredibly easy compared to driving investors to push the button and do it. And there are all kinds of, I'm not going to get into it now, but that's basically, so Jenny Watson's here. She talked to me, has a great company, Digital Arts Media Network, who's putting together sort of programs for startups to help them succeed with crowdfunding and get them the capital to do it, because it's the marketing is no question the hardest part of all of this. And so work done. Joe's here. Is John still here, or did he have to go? Okay. So I'd like our first. So our first panelist. What we wanted to do, I had 3, and unfortunately one had to go, so I'm going to put Lester on the spot, and you're gonna be the panelist for the other one. So the thing that I feel is important, if you go and look at our site, which isn't the equity crowdfund or the Reg CF site portal, our site, every issuer tells you 3 things. 1, your mission and vision, like what you're in it for, why you're doing it, what drives you, how you're trying to change the world. Your project, which is the thing you're building to do that, and the team that's doing it. And my belief is that those are, in this new world, like before, as I mentioned, in equity, you had to figure out if the valuation was fair and what the exit strategy was and all that stuff that VCs ask you all this time. None of that matters. Like, if you believe in the team and you want to enroll in this effort, you believe in the vision, you think that this team can execute on that project, it's really all you need to know, and all the rest is gravy. So I'd like Joe to tell you all his mission, vision, his project, and his team.
Okay, thank you. Do I have more slides, or am I just talking?
No, it's only one slide.
Oh, good. Yeah, my name is Joe Rogers. I am the CEO and founder of Work Done. I have, let me just ask, has anyone here ever been in a work situation where there was someone a coworker who knew everything, like retired and walked out the door with all this knowledge? And, right, okay, very good. And have you ever been in a situation where maybe you had a piece of software where you keyed all this information in and then maybe printed it out and then had to walk across the room and then key it back in, or do cut and paste from one screen to another repeatedly? Anybody had that experience? Never. Okay, good. So Work Done basically leverages my experience. I've been working in the enterprise content management and business process management space since 1990 to large multinational corporations, US, Middle East, Southeast Asia, banks, insurance companies, etc. Work Done is an AI digital workforce platform, which is a highfalutin way of saying we allow you to automate or self-automate yourself, or for organizations to self-automate. So what does that mean? Basically, we watch the work coming in. It's for kind of high production workflow environments where you're processing invoices or purchase orders, insurance claims, mortgage loan applications. We watch the work coming in, we gather analytics on the work type, and then we actually watch the activities that are performed to process that work. And we gather analytics on that, and we feed it through our own supervised machine learning to come up with custom heuristics around your company. Once we see enough transactions come through, you get a message that your agent is now ready. So at that point, we have what we call benchmark review, where you can observe the results of the agent until you reach a comfort level where you decide that you don't have to do that work anymore, and you can let the agent do it for you, and then you can do something higher value.
So you're like the Bobs from Office Space that come in and fire the staff.
Not exactly. There is one slight difference. I'm glad, it's a great movie. AI with a conscience, it's very clear that there's a lot of effort that goes against sort of this repetitive, mundane work. So we're gonna be liberating or freeing up some brain power to do higher value stuff. But the plain fact of it is, it's going to decimate a lot of jobs.
What was it, I mentioned it earlier, and now I'm blanking on what the software is that people use to manually automate things. You know, we were talking about it before.
Oh, what? I'm not sure. Oh, robotic process automation? Or
Right, no, but the other one, when you mentioned robotic, I was saying it was the sort of the manual way to do it.
like Zapier?
Zapier, yeah. Yeah, so in my last company, like all of a sudden, you know, like the inside sales team, one of the guys, the manager found, you know, Zapier, right, a few years ago. And he just started going around automating everything, because why not? But, you know, so it was like, if the salesperson had to, you know, after this phone call, send this email, then do this, then do that, log this thing in that. So he had to go through and think through all the things that need to be done. So the way when Joe explained his system to me, I suddenly thought, okay, basically, you would put it there and they would do what you have to do manually with Zapier. So they're seeing what everybody's doing and then making all of those things much easier. It's not like you're gonna get rid of the salespeople, it just means that they can spend their time selling instead of logging this report and doing this and doing that.
That is correct. And what, in effect, you end up doing is capturing sort of a best practices knowledge base, because you have a number of people training this system, and you can actually discern between, say, the star performers and the below average performers, and it raises everybody up. Because people are still doing the work, as regulations change, annually, new laws, whatever, the system can adjust to the new regulations. And let's see, imagine you, the scenario I like to describe is, say you had an auto parts store, a small mom and pop operation in a strip mall, and you spend half a day every week going through your email and pulling out purchase order, PDF attachments, and keying them into Salesforce. You could decide to install the work done monitor, and that's it. All you have to do is install it and keep working. There's no training necessary. This agent, after it's seen enough transactions, is now available, and then the agent can do the work, and you're now saving a chunk of time that you can repurpose. You actually have the option to make that agent available to the public in a marketplace, an agent marketplace, whereby other people in a similar situation might choose to hire out your agent, and then there's a revenue share that's available. And that agent resides on the blockchain. So the commerce transaction is taken care of by smart contracts.
Very cool. So team was the last part.
Team, yeah. So my day job, I've been self-employed since college. I was Harvard, 16 years old, computer science major, and been self-employed since. I have a consultancy that is an IBM business partner, and we do a lot of work with IBM. We're actually working on a big project, a counter fraud project with Citibank right now. But I'm sort of stepping away from that, because that's all old on-premise, kind of old school legacy stuff. And I'm purely cloud SaaS, machine learning now. But the guys that I'm working with, I actually have never worked for IBM, but my three partners are, or have worked for IBM. And John Green, product management, Donald Wilcox Jr. is a top-notch developer, engineer, and my salesman, Gil Cargill, who is, he's just a master. Actually, he's got a side business of like training sales teams, but he was very excited about this opportunity, and he's got a large clientele that he wants to plug this into. The guy's 70 years old, but he's got more energy than me, so it's not saying much, but
All right. Oh, yeah. Well, let's see. Are you next? Who is next? Yes. That's this.
yeah.
My name is Lester Furstenberger. I'm general counsel of Ventus. I'm a banking lawyer, been in securitizations for 30 years, asset-backed guy. What I've done for a living. Invented a couple technologies that were applicable to the mortgage-backed securities world. Unlike Joe's product, our product is very specific and niche. In the mortgage world, this is Washington, D.C., so you've all heard of Dodd-Frank. Dodd-Frank said that banks and appraisers couldn't talk to each other. So what the industry did to solve that problem was create AMCs, appraisal management companies. What these AMCs do is not a lot. So they basically take what used to be a $500 appraisal, they'll take $150 of that and just act as a Chinese wall. Not a lot of other value happens there. We've invented a technology that will satisfy Dodd-Frank, allow the banks and the appraiser network to do the transaction, but we also have a scoring model in it. Further, because markets are efficient, appraisers started saying, you know, this isn't a great idea that I'm only getting $350 for what I used to get $500 for. So what they started doing, not always, but more frequently than they used to, will say, oh geez, this is a complex property, I'm gonna need $100 more. So a property is either considered complex or standard. So that's we've created a complexity score so that the pricing is known right up front and right away. We're funded, we're developed, we have 130 clients, we're about to start generating cash. I know David for 20 some years, way back in Ultraprise. So this is an interesting idea to me. So I know capital markets, it's what I've done most of my life, professional life anyways. So this is very interesting to me. I'm curious to see how this is gonna work, and so we're here taking it down this road.
Thanks.
Yeah.
When you're on the team,
These are people I've known from Wall Street for a long time. John Iatesta, John George, and Steve Jamison founded a company called MasterServe. One of the engines from that company, they did a lot of work for Bank of New York, one of the collateral trustees in the mortgage-backed world. It's their smart engine. It's a smart engine that drives this whole process. Who else is on the team? So Steve's the Chief Technology Officer, great guy. John George is our CFO. There's 6 partners. Oh, and then the two appraisal guys. Tony Ravita, he's in Cleveland, Ohio. I'm from Ohio. And Keith Wolf. Keith is a statistician out of U Chicago, very bright guy, so he does all the regressions. Tony's the appraisal expert. Between both those guys and the rest of the team, we're getting a lot of people paying attention to us. So we're just one point on this. I'm a bank lawyer. You give me rules, I'm going to follow them. I would not do this deal unless I thought we had very, very little risk. We were doing it the right way. If there's any chance that we're going to get in trouble with the SEC, I'm out. So that's why. And I actually invested in David's platform also. So.
Remember I said about hey, we need $25,000 to make payroll tomorrow? That's him.
So think about that. Most of you don't deal with securities lawyers or laws. Most of you don't know the ugly side of having the United States government across the table from you pissed off. Never do that. So my thought is this platform helps with that.
Thanks so much.
Mm-hmm.
And then our next panelist, Carl Joseph, also known as Thorny or CJ.
David gets to call me CJ because he's known me for over 30 years. But,
hey Dad, remember that time I didn't come home from high school for a really long time?
That's why he brought you today, to rat me out. I'm happy to be here. I'm from Furex, which is kind of a anagram of future exchange. Like David said, we're very passionate about liberating people from the violence of the fiat currency system. And one reason why I really look forward to working with David is because when we talked about these things last week, we realized we were both really aligned in terms of the social change potential in cryptocurrency and blockchain technology. And that, for both of us, was more of a driving factor than any kind of money we could make. And I think if we have quality products built around that philosophy, that the product will sell itself. So we don't have to worry about how much money we're gonna make. Furex is designed to disintermediate most of the financial system from precious metals trading, because we think, like David, that this con game goes back many centuries. We might say to ancient Babylon, but certainly to the merchants of Venice. And what we want to do is build a platform that will allow people like yourselves, ordinary Joes and Janes, to exchange cryptocurrency for precious metals in a trustless environment. And the way that we're going to do that is by doing what we have right here, building a park bench where people can come here and meet and say, hey man, I got some cryptocurrency, you got some gold or some silver you want to sell, and then exchange it, okay? So what we're building really is just a park bench for people to meet on, where you can post what assets you have and what you want to get for those assets. We don't call it buying and selling because there's no fiat currency involved, okay? No fiat currency on our platform at all. All exchanges will be done with the Furex token as the intermediary, the medium of exchange, all right? There will be no leveraged trading. There will be no margin trading. There will be no derivatives. Physical delivery of metal will be required for every trade unless it's strictly crypto for crypto. And to ensure the faith of the metals being delivered, we have a test ship test method. We're working with a shipping partner. When I deliver my when I deliver my metals to be shipped to the other trader, it's tested for veracity, okay? If it passes the test that validates it as genuine silver or gold or platinum, it can be shipped. When it gets to the other end, before the receiver can accept it, it is tested again for genuineness, all right? There's something like $600 billion of fraudulent precious metals being traded today. Recently, I think it was early last year, late the year before, even the Royal Canadian Mint sent out counterfeit 10-ounce silver bars. Now they say they didn't do it, but it got in the truck somehow, okay? So what we intend to do is eliminate those counterfeit metals from our system so that people can trade those with confidence. Also, we believe, like no one else does, that crypto backs precious metals. Precious metals do not back cryptocurrencies. All the sound money people, all the gold bugs, many libertarians are out there saying you need precious metals to back the value of your cryptocurrency. That's wrong. Precious metals trade on heavily manipulated exchanges in the COMEX and LBMA. If you want to put together a large precious metal order that requires physical delivery, you're going to pay double COMEX spot price for that. I'm talking about like you want a ton of gold. You don't get a quantity discount, you get a quantity increase because it's so hard to deliver that much precious metal. What we intend to do by making the Furex token the pricing index for silver and gold is create a new pricing mechanism that can trade free of manipulated COMEX and LBMA precious metal prices. So we will be a completely independent exchange. If it's successful, it's the kind of thing Babylon's banksters would kill the founders over to prevent from growing. but we're gonna take the chance anyway.
All right.
So,
So you're basically like the anti-Bass Brothers decornering the silver market.
that's right, decornering. So, and I think David has a lot of courage to put his platform out there too, because it's very revolutionary, and that's one reason why we want to work with him. All right, and he solved a big problem for us in terms of a utility token versus a security token. So team, is that right?
Yep.
Team. Yours truly, my background is in natural resources management, but I've just spent the last 15 years running a company in China, and I'm very glad to be back home in the US of A. John Collard has run a tax company in Los Angeles for many years. He's now located near Provo, Utah, where we also have our headquarters. Michael Goyer is Canadian. He operates a business in Canada currently. He might be the only one of us with an actual day job right now, because John and I are committed full-time to developing Furex. The idea originated with him, and then John and I developed the idea further and brought it to fruition. Our launch advisor is Greg Mockett. He's regionally very highly regarded as a get-up-and-go CEO. He usually works only the launches and then moves on to the next project. And he's kind of the grounding mechanism. The rest of us are kind of like visionaries, dreamers, airy-fairy, and he's the one who cracks the whip and brings us back down to earth and has us look at reality. Dan Roper is a brilliant tech guy. He was the tech lead at ProPay, which was an integrated pay system. He probably could have walked into any job in the tech industry that he wanted, and he chose us because he liked our project so much. And this just came out after our phone call yesterday. We have a rock star from the transportation industry whose name I am not yet allowed to divulge publicly, who will also be joining our team in an executive capacity, and that will be the final really piece of the puzzle conceptually, because we need the test ship test integration with transportation carriers to ensure the genuineness of the metals within our network. And we've also solved the problem of decentralized vaulting. No one else has that. We know how we can store metals just like Bitcoin is stored on the blockchain.
Cool.
If you want to know about that, sign an NDA and we can talk further. Okay. Might probably end up on the platform for you investors to read.
All right.
Okay.
Thanks. Well, all this, I mean, we're already, I don't even remember if we're supposed to end at 8 or 8:30. 8:30? Well, that's good.
8:30.
It's only 15 minutes over. And the unions are probably what? They've got to kick us out because they have no clean or whatever. But no, I would like to, I mean, this has been interesting, but if there are questions, comments, one thing I would also just like to offer, if you're an entrepreneur and just want to do a really quick plug for your company, I mean, I don't mind that. But just, quickly, if there are just any last burning questions, want to make sure we answer them. Yeah.
You mentioned Start Engine as a platform where you did your CF, but it sounds like you're also competing with Start Engine.
We are. So we've done, I raised $1 million on return on change back in 2014, just when crowdfunding started. I raised money on Seed Invest. I raised money on Republic, $325,000, and I did the $171,000 on Start Engine. As I mentioned, I had no desire to do this as a business. It really just was, my view of it was, I could not talk sense into Howard Marks on what a security token was and what a token pre-sales agreement was, right? So we did one that was a SAFT, and he said, we're not doing SAFTs anymore because, you're gonna confuse everybody in terms of what's a utility token. And I said, well, no, this is gonna be a security token. He said, well, you can only do, on our platform, we're only doing this thing called the rate, where you're buying equity, but then you're getting free tokens. And I said, well, I already did that on Republic. That was basically the previous offering we did, which was stock with free tokens, which tested the whole waters for us. But so I couldn't get anybody to see the wisdom of an investment contract on the blockchain as the core security. So, that's why we did it. I mean, it's that simple. Now, our model is not to make money. We're not allowed to make money on the transactions. So like we mentioned with the Bloomberg, our view is if you guys are successful and these guys are successful, the reason I'm here is I want security tokens in the market. I mean, no one's gonna sit there and use our platform if there's not a lot of cool stuff to trade. So we plan to make our money from issuers, just keeping them, you're not gonna be able to just communicate with all of your investors on Twitter and on Telegram, et cetera, in this new model. So everybody's gonna need a platform where for investors to talk to each other, for issuers to talk to each other, investors to talk to each other, where the compliance is enforced by the platform itself, so nobody has to worry about becoming Martha Stewart in prison in West Virginia, right? It's that simple. So that's our goal. Yes, we're competing with them. We think we have an unfair advantage because we're not trying to make money off of it. They're trying to make their whole business on these transactions.
It kind of worked out for her, though.
Yeah. I mean, if she had the choice, do you still think she would have not gone to? I don't know. Who knows? Yeah. Charlie.
You say you're a public benefit corporation or PBC?
Yeah.
Okay. But you're, from a social capital perspective, is there any, you're not necessarily vetting, I know you talk about the Internet of Values or the value system of kind of the mission, the team and stuff. Are you adding some vetting to any deal that comes onto the platform, or are you saying that as we're getting started now, we like that, but to scale, we gotta win the whole game?
Well, no, so what we're doing, we thought about that a lot, and we don't want to impose our values. So what we wanted to do is basically do a double bottom line quantification. So if I look at a valuation of a company, I want to say, here's essentially the value in the economic value, and here's the social benefit value. That's harder to quantify, but we have our brilliant software engineers basically saying, hey, I'm developing this model. I'm putting in what we think our expenses are going to be, what our revenue is, et cetera. I'm also going to say what I think the benefit is to society, and we're going to try and somehow quantify that. So basically, if someone goes to CJ's, they can say, okay, well, for every $1,000, I'm basically doing this benefit of people who are gonna, they would have to understand what it means to be free from these other things. So his might be, I might be good with it. Or, Lester could say the social benefit for me is people are gonna be able to buy their houses a lot faster, and they're gonna pay less for it, right?
But not every, your Indeco is the PDC, you're not every company.
Right, but what we're saying is every company should quantify for the person buying. I mean, like BlackRock just said, we're not investing in any more companies that do not have some social value, which is like, they're the biggest equity fund in existence. So I would love for BlackRock to come and say, hey, I'm looking at these and saying, these companies are saying, it's not like their boards are, I think Joe is the only other public benefit company. So he is actually, when he filed, he had to say in his articles what his public benefit was. What we said our public benefit is liberating essentially human potential. I mean, we're looking at this more as the long tail. So if I have a coffee shop in Zimbabwe, and I need $10,000 for a roaster, right? I can't raise venture capital for that. I can't necessarily go to a bank for it, but I could issue tokens, you know, to my customers, and you know, every customer could pay $10, like, right?
You know, I think it's
So,
clear. There's
so that's
definitely a way.
so that's ultimately what we're doing, but it's you know, it's abstract. So what we're just trying to do is, because of this, we're trying to get all of our issuers to at least be thinking,
Yeah.
you know, I want people to look at us, I want to enroll in their project. I want to have an emotional basis. I don't just want to make money. Cool?
So my nagging question on that was, as a small business, the recent tax law made it really, really good for me to keep my LLC rather than to go to the C corp.
You can do this as an LLC.
Okay.
No problem at all. Yeah, and so the cool thing is, we actually started thinking about doing investment contracts as membership units, but then we realized we didn't even need to do that. So, but anyway, there's no, when it was equity, you had to become a C corp,
Right.
or an S corp, but here you don't. They're just investment contracts, and any LLC can have contractual arrangements with any number of people. So
That's
you're good.
attractive.
Yeah, it's pretty cool. I'm sorry, Tom, can you, anything you want to add? I just, so Tom, and I do want to recognize Cogent as one of the sponsors tonight. They came up with this cool live streaming thing, and we really appreciate them. So I do want Tom to go and say a couple things about his firm.
Yes, it's been great to be here and to hear this explanation. So I just have to say as a disclaimer, I'm not making any comments about the legality or illegality of anything you're saying. But you know, I just want to make the point that, because I agree with so many things you've said, and I've heard David talk a couple of times, and I have two things always come out. One, he always refers to the Marshmallow Man in Ghostbusters. And the second thing, he always mentions Sand Hill Road. And I was a grad student at Stanford, and I worked at the Stanford Linear Accelerator. I was in applied physics before I became a lawyer. And I was doing that bike ride up and down between campus and Sand Hill Road, you know, all year, in the hot, the cold, and everything. So I feel very close to Sand Hill Road. But, you know, I just want to make this one point, because, you know, most of these discussions where we talk about securities and everything, the focus is really, what we have here is the registration requirements. So, and remember, the scheme is that, what David is saying is that if you're a security, you must register under Section 5 of the 33 Act, or you must find an exemption. And he listed the exemptions there. But that's not the end of it. I mean, once you cross that line into the security realm and that world, all of the other security regs now apply to you. So all this stuff about, you know, strict liability and fraud and Rule 10b-5, all that kicks in. Absolutely, there's no question about it. You cross that line and you're in that realm. And people tend to forget that, oh, so now I've got the registration, I'm exempt. No, you're still a security, and you are subject to all those requirements. So that's, I think, a key point to be made here. The second point I would make is that, you know, if you look back over, you know, whatever it is, 5-6 years, and you look at the time sequence as to what has happened, you know, we had Bitcoin, and we saw all the criminal activity associated with it, and it got kind of a bad rap with the general public. And then we kind of worked our in Mt. Gox and the failures, and you know, and then we kind of worked our way out of that a little bit, and then we got into alternate coins, and we got into ICOs. We had this big boom with ICOs over the last year or so, and you know, like David's saying, the pump and dump schemes. Let me tell you, any lawyer would tell you, any securities lawyer would tell you immediately, Twitter, pump and dump, yes. This is a red flag. There's no thinking for us to hear that, Twitter, because what's the concept of securities laws? The concept is dissemination of information so investors can evaluate. And inherent in that is disclosure of material information an investor would rely on, And it is fraudulent to omit material information that a reasonable investor would rely on. So when you start doing Twitter and pump and dump, that's where the violation is, because of the broader concept. So we moved through this ICO thing, and there was a lot of, I think, my personal opinion, I think the SEC was caught a little flat-footed by that, and they're playing catch-up, and the regulatory processes are slow, partly because when a regulatory body, and I worked 10 years in a independent regulatory commission. Once an independent commission like that speaks, they're pretty much on the record. And you can't go back and change your opinion 5 days or 5 weeks later. Oh, well, we didn't know that. No, you gotta give a comprehensive explanation of your policy, because among other things, it will be reviewed by the courts. So there is an inherent need to move a little bit slowly. But they are getting there, and they are catching up. And so now we kind of move through the ICO phase, and people are flagrant cases are being prosecuted, like, the Munchie order and Arise Bank and several others. And then nobody registered, right? Nobody registered, right? And the exchanges aren't registered, right? So they're playing catch up. So it really kind of makes sense to move to something that is a security, because it kind of gives confidence that people are trying to comply, And so it's kind of an evolution from the cryptocurrencies and Bitcoin and then the ICOs. And now, hey, let's just do a regulated entity and comply with the laws and the disclosure and everything. So I think STOs are really a very significant event for this whole crypto world. And it's happening. It's happening, a little slowly, but that's because everybody is trying to figure it out. And the key point here is, in my opinion, just do the best you can to comply. Because if you do get caught, you want to show a good faith effort to comply. And even if there is a strict liability requirement, remember, the regulatory agencies like SEC, they do have prosecutorial discretion. So it may technically be a violation, but the SEC is like any other enforcement body. They have a budget, they have a number of people, and they have to pick and choose what they can prosecute.
Basically what
And they're
Tom's
after these
saying,
flagrant cases. So if you've got a reasonable defense of good faith, it's probably gonna help you.
what Tom's saying is there's that old joke, in this case the SEC is the bear, where the two campers are, the bear's coming and one's putting on his sneakers, the other says, you can't outrun a bear, and he says, I just need to outrun you.
Yeah.
So all we need to do is be more compliant than all of those idiots out there.
Well, I'm not gonna quite agree to that statement. Those are your words, not my words. My words speak for themselves.
But the other thing I will add, as you can tell, I mean, the key takeaway is that there's nothing more expensive than a cheap lawyer. So if you're trying to decide on whether to hire someone like Tom who's going to keep you out of jail, or someone who really doesn't care.
Yeah. So on that note, the Cogent Law Firm does have a pretty good fintech group. I have a couple sheets of paper out there. You grab on the way out. We're deeply involved in these issues. We've got a good team of people, and so we're glad to help in any way we can.
All right, thanks so much. So we do need to wrap up. I'm going to do one thing for posterity. 1, 2, 3. Go team! All right, thanks everyone.